Okay, so really nice to meet you guys. Nice to meet the crowd. Hope you guys are energized for the morning. My talk today will be titled From Generic to Specialized, Building AI Agents for Finance. I'm Alex, one of the co-founders of True North. We do have a booth outside. Please come visit us. A little bit about myself. I'm a builder, a strategist, investor, consultant, researcher. I used to do AI chip development, one of the largest in China. I used to be an investor with Temasek, one of the largest Singaporean sovereign wealth funds. I was with McKinsey doing strategy for hyperscalers in APAC. I used to be with Intel working on the early days of machine learning for communication. So it's a bag of stuff that I did in my past, and it has led me to the path of quantitative trading and how to use agents to empower your personalized finance. There's one very interesting fact. Probably more than half of the people in this room right here have asked questions for ChatGPT or Claude regarding finance, right? Anything on how to invest, how to trade better, should I buy this, should I sell that, why is this pumping, why is that dumping? 54% of the people have asked that. But less than 11% of the people actually believe that AI will work, or the recommendations given will actually work. Now, why is that? If you've ever tried to do a 5-digit by 5-digit multiplication in ChatGPT without tool calling, 80% of the time it will hallucinate. If you feed it a lot of price data on OHLCVs, candlesticks, trying to let it reason through a lot of the take profit, stop losses setup, it will hallucinate. Now, why is that? There's traditional quantitative finance, there's AI reasoning. Now, how to combine these together such that the adoption will be equal to conviction. Now, our belief is that the finance industry needs its own AI. Like every vertical industry, if you just go about it, less than 50% of the accuracy can be achieved if you directly use out-of-the-box models. Even with very, very good prompting, even with very good guardrailing, if you have good MCPs, it will still fail at a lot of tasks that involve serious math, serious quantitative finance, and a lot of things that attend to the market dynamics. So how do we move this better? We believe for domain-specific AI, especially in finance, it's really not about how we tune the agents to be smart. It's not really about how we pre-train, at least in our own capabilities, how to make it good. It's about a system for incorporating ever-evolving knowledge of finance. The knowledge, including the expert knowledge distilled from pro traders of the world, from the quants of the world, to the user's personalized investment needs for your risk-adjusted returns. There are 3 core ideas that I want to share with you guys today on how we build financial agents. Number 1, playbooks. Number 2, agentic search. Third, prop models. Playbooks are artifacts or corpuses on how to semi-deterministically guide the agent's action space such that hallucination can be get rid of, such that quantitative finance computations in the back end for backtesting, for live testing can be guardrailed. Agentic search as a systematic method or design pattern to manage the expert user context pipes that exist throughout the entire system of your agent construction. Proprietary models using different variants of fine-tuning, reinforcement learning that diligently evolve from the patterns of the playbook and the agentic search. Now let's deep dive a little bit to see what I'm talking about. On the first part, when you ask a generic AI for trading setup recommendation, right? We all done this before, UI or not. If you look at the left, super beautiful, right? Entry prices, TPSLs, set up properly for you. Click on the full analysis. Oh man, support resistance, volume analysis, it all makes so much sense, right? But if you really look at it, or even try to read it and reason through it, number 1, TPSL entry, it's just some random Fibonacci level that is set based on the input corpuses. Number 2, the TPSL numbers are actually the same in my example. And this is our app in the very beginning days of how we began on this journey. There's no way for the model to actually reason out without proper guardrails. Then you are over-engineering a lot of the prompts. Number 3, random numbers that are injected such that it will constitute weird risk analysis or risk guardrails that do not make sense. And number 4, to making up support resistance numbers that will be super, super erroneous if you were to place it for an actual agentic trading application or task. We believe that domain-specific AI needs playbooks. So imagine if you could imagine and fetch all of the context, and you can reason through the question, right? It's kind of like going to an exam, and you're able to have all of the cheat sheet and all the books open. You need to look through it, but then again, context rots, right? 200K, 1 million context window, very good to have, but first of all, prone to hallucination and making things up. Still happens. 2, it will screw up a lot of the quant-related computations. And I don't know how familiar you guys are with, but given that 5-digit multiplied by 5 digits, are you so sure that you can trust the AI in coming up with something that is very quantified? Third of all, super hard to handle long-tail domain-specific tasks. Does not generalize, does not attend to the audience of the task very well. But what if the context actions could be injected dynamically in runtime? We call it playbooks. So these playbooks, what it wants to achieve is 3 purposes. 1, we want to eliminate the hallucinations and quant-related tasks such that all of our results are white box and backtestable. 2, the modularity and dynamic management of the context is super important. You only have so much context that could be used before it rots. If you code, you know that for sure. Number 3, it grounds the long-tail tasks regarding some of the pre-baked SOPs on how to go about testing a lot of the ways that are established in traditional quantitative finance. Now, what does the playbook look like? So if you go like step by step from an agent intent, I'm just gonna say, give me a trade setup for a Solana 4-hour time interval. What that does in a typical setup is that first, it goes through an agent intent routing, right? Figuring out your intent, figuring out what you want to inject dynamically, but then what's most important is that it's going to go through a playbook lookup. This playbook lookup, it's a combination of prompting steps with code snippets with data corpuses that are injected during runtime into the entire agentic workflow, such that when it actually routes to the right model with the best unit economics, in the LLM main loop, it will invoke 2 processes, right? Some relating to data search of grounded on-chain, off-chain data. Second, it will take everything together with the code corpuses, make adjustments, input the parameters, spin up a sandbox that is very safe, and generate the runtime coding, for example, to set up your take profit intervals or your high and low levels. Now, these are highly precise quantitative financial computations that you need to guardrail with the entire agent playbook injection. You can't let the agent come up with this kind of stuff during runtime. It's not gonna work well. It's gonna hallucinate still. So by grounding it in an entire end-to-end flow, some of this computation will make a lot of sense once you actually go about doing the trade. So what we figured is that for domain-specific use cases, it's actually best practice to dynamically inject context to achieve runtime deterministic actions. Now, True North playbooks, this is an MCP sort of side that you can see in the UI. We have different playbooks set up, different prompts, different injections that we can do based on traditional trading, a lot of financials in the back end. It is a mirror to what Anthropic has been talking about, the Anthropic skills, right? We have been doing this long, long before because we just figured out that the problem for quantitative finance is very, very hard to solve. If you put these side by side in parallel, you figured out that the finance-specific reasoning and inference requires high precision, white box quantification processes, and as a matter of fact, more than 80% of the use cases at True North use playbooks to reference in runtime to guard the agent's action to eliminate hallucination. Now that's the number one takeaway I want to share with everyone. Number 2, let's talk about data. So vertical AI players, they're all building domain-specific data modes. If we look at 2 different industries, one on the left is Harvey AI from law, on the right is Open Evidence for Medicare, for doctors, right? What does Harvey do? It's AI trained on firms' own legal documents to serve the entire paralegal workflow. What do they have? 1, proprietary firm work documents. 2, unique legal approaches. 3, custom legal workflows and litigation strategies that are proprietary to winning law firms in the Wall Street, right? Open evidence. It is a AI medical search giving doctors instant evidence-based access on peer-reviewed journals that evolve rapidly through time. They have exclusive licensing agreements. They have peer-reviewed medical literature. They have consultations that generate on-the-fly data, including decision patterns and clinical reasoning path. Now, why are these important? Because when you really think about the idea of proprietary, what is actually proprietary data in finance? We have 3 tiers of it. Tier 3, data that live in public domain, right? The news, the web search, the Twitters, the on-chain data, SEC filings. Now, it's only a matter of time before you find it. There's the tier 2 data, where data are paywall. Market research, secondary research, analyst report, right? We do our financial modeling, we need these kind of stuff. But what is the actual tier 1 proprietary data? It's from 2 data flywheels. 1 is from the experts. 2 is from the users. Who are the experts? I used to be in consulting. What I do all day is that I call up experts and ask them, yo, what is in your brain? What is up? Tell me the latest of the industry. And I write my pages, my deck with it. This is what agents should be doing for you. And in finance, a lot of the knowledge are in the expert traders' heads, the CityDales, the HRTs, these people. So unique analytical frameworks, investment models, research methodologies. Now, regarding the user, I think a lot of speakers talked about this, but individual behavior patterns, your transactions, your holdings, your decision-making preferences, N-5 steps before you pull the trade. What are these data that you can use to combine together to predict the future of a two-sided platform? Now, it's super tedious to manage the expert user data flywheel, right? The reality of distilling, indexing, managing all of the expert data, it's a chaotic paradise, guys. You have graphs, trees of multimodal modalities, super hard to reconcile. And 2, you need to have predefined data structures that serve your hypothesis. Now, who is very sure that there is a certain hypothesis in finance that will work throughout the market regimes? No one. So if you have something that's predefined, it becomes faster than you can actually re-index or handle it. But what if there is a pattern where we leverage the agents and let it do it for you? And we call this agentic search. So agentic search, it does 3 things. It discovers patterns automatically through data iterations. And 2, we want the automatic schema generation and schema to emerge the structure from actual usage of the user and the expert distillation. And 3, we want each iteration to create and optimize useful playbooks, as I mentioned in the first part of our sharing, to make it inject in real time. Now, we use agentic search patterns as a basic constructor to build all of our context pipes for both of the expert and the user-facing services. So how do we read this sort of block diagram? Very simple. There are 2 sides of this problem. One is the producer side. The other is the consumer side, right? On the producer side, expert input data. They're trading journal, frameworks, videos, annotated images, the constructor intent, right? How I want to distill my hypotheses. It can even be agent-generated. Going through an agentic search, which is a simple pattern of our agent referencing the data warehouse, which is a unified search interface tool call to on-chain, off-chain data, real-time and streaming. Now, that combined together is going to generate 2 things. One is an organized data corpus. The second is a schema. And these 2 will be consolidated together, put into a unified playbook repo for management interfacing. Now, how do you use that from the consumer side? For consumer side, it's actually any application or use case that you want the agent to achieve. It could be agentic search. It could be manage my portfolio, what's up with my bags, right? This agentic search pattern is again a user query. Now it's going to match up with the playbook repo corresponding to the automatically generated and refreshed schema for each of these expert pipes, referencing the data warehouse and getting it out. So these 2 kind of go together. And as I was saying, product side pipe, consumer side pipe. The key takeaway is that data is ever evolving, right? So constant adaptation, association must be made useful. 100% of the context pipes built in True North is now using the agentic search pattern. So we don't need to go ahead and presume a data structure that will change. We just let the agents figure out what actually works and go find references within the data corpus or the playbook to find something that is referenceable so we can flexibly and efficiently do distillation. The third thing I want to share is that, we all know there are different variants of fine-tuning and also reinforcement learning, right? So common terms, SFT, DPO, RFT. What is supervised fine-tuning? It's learning to mimic. What is DPO? It's learning to differentiate. What is RFT? It's learning to reason by examples and showing you how to actually reason. I want to show you how we actually do this with a couple of examples so we get more context in how financial fine-tuning actually happens. For SFT, it's very simple, right? For example, why is Sol dumping? Now, the output would be, okay, Solana is down 12% in the last 4 hours. There's certain analysis of technical RSI oversold, derivatives funding rate skew. There's news of whatnot. There's smart money flowing. People are buying. There's market context of matching BTC as a benchmark. So there are primary drivers. Now, what does this do? It helps with the very first step of learning deterministic patterns, templates of answering and question of events. But it hallucinates and makes bad references and judgments for out-of-sample inputs. But why do I want to still share this? Because you find that probably more than half of the applications or very simple agentic tasks can be done with this. Very cheap, right? Does not require a lot of examples, and you can easily use AI to generate synthetic data to kind of use and train it well. So all of the models need to be fine-tuned, especially for finance-related tasks. So you have to have this as a very, very cost-effective function. If you move a step forward, what is DPO? We need to let our proprietary models reject the generic responses. So what are good outputs as given in the same example? I'm going to say whale is sailing, right? The top 100 hyperliquid wallets are actually cutting 70% of the positions. Ecosystem is declining, right? It's not going to work anymore. Technical derivatives, right? It broke support, liquidations are happening, funding is turning negative. This is a positive example that you can get. Now, what is a bad example, right? It's just talking about very, very plain vanilla stuff that you're going to be looking at from generic models. These two, when put into context, it can even enhance the model to a second step if you find the reasoning accuracy not sufficient by just using SFT. So the key takeaway is that it does learn what a good response looks like. It rejects bad templates, but it still makes mistakes about causality and correlation. And it gets worse if the expert annotation is wrong. Now, what we want to do as a third step is we want to teach the prop models to step-by-step evolve its reasoning. Within the reasoning trace, let's say I want to still analyze Solana. I want to be first checking the price action, second checking on-chain data, third check the exchange inflows, and fourth formulate hypothesis number one, blah, blah, blah. I'm going to have a lot of steps. And I'm going to define the reward functions within if it follows the certain format, the parameter injections, the reasoning and correlation. Now, by following this reasoning trace, we set up multiple of these examples with the help of synthetic data generation by an expert, agent, or by real experts in-house to figure out how they can reason through this multi-step issue tree. The agent is rewarded for making the correct citations, logical inferences that can adapt to market dynamics. So what does that look like if you combine everything together? There are three things you actually care about if you want to be doing fine-tuning or any sort of reinforcement learning. It's about accuracy, it's about cost, it's about latency. So end-to-end accuracy, it jumped by more than 28% absolute value based on a GPT-5 baseline on our internal benchmark, golden to the Q&A answering of trade applications. Normalized cost per job dropped by 80%, making it super cheap and deployable for everyone to use. Median latency cut down by almost 60% based on the use cases that we have benchmarked across. Putting it all together, we have built the True North stack. So at True North, we are the agentic intelligence platform to house personalized finance. We power the entire creation, deployment, and subscriptions of your personalized agents anywhere. And by anywhere, we mean in the form of the very basic integration of MCP deployments for True North by using agent builder flows by OpenAI or NAN. We can also be deploying this on the True North native app. Now, I'm going to show you a demo. We actually also have it outside. We can show you in live. But for hiccup purposes, we're going to do it right here. Now, we already use Claude, we use OpenAI anywhere in our lives, right? So it does not make sense for you to go out of distribution and to go where the user does not live. we basically can let you connect our MCP. It has all the playbooks. It has all the capabilities that you need. And you can turn off web search because it's going to hallucinate. It's going to outdate. Now, what's up with the market? What's up with Bitcoin? What's up with crypto? By the way, we start with crypto just because the information arbitrage is much larger. But for finance, as I was in TradFi in the past, it's a very similar concept, right? Now, when you go through this entire thing, you find that by calling the tools and grounding the entire calculation, you have the peace of mind that it will not hallucinate. And given the data that is required, it will reference different markets from, for example, polymarkets on what the odds of BTC price going to be, from different technical analysis that we have performed in-house, distilling user knowledge, to forming these market snapshots and trending recommendations on macro events and micro movements of the product itself. So this thing in itself is already a very, very useful tool, and we are going to be providing to users. The second is that if you abstract a flow further, you have to serve a lot of B2B applications. You need to serve pro traders or even institutes. They have workflows. But these workflows, it would be super simple to just stick our MCP inside such that this process in itself could be perfectly managed on how we can serve their intents for different types of analysis. And basically, you can run it through and deploy it, for example, in Discord. By the way, this is our go-to-market. We work with some of the top traders in the world, some of the biggest in the Western region. And essentially, you can let the traders deploy their calls, and the agent 24/7 serves your personalized intent on, is this call still valid? How can I set up this and that? So the engagement of the agent will be super sticky and completely personalized on your experiences of how you trade the market. Now, the answer in itself, think about it. These private traders, they need to serve tens of thousands of these investors, these followers. How do you do it well? With this, it's high engagement and trained off of all of their educational stuff. If they're an educational sort of KOL, influencer, or top trader, it's multi-modalities of data that will ground it together. Moving on from this, this is our main app. Within the main app, you can see that these are native agents that we can deploy, or it can be the pro trader agents that we can let you subscribe. The agentic research, all of this is generative UI. It basically lets the agent go through about finding the market movements in itself, and you go through it. Now, if you find something that is interesting, for example, Esther, right? It talks about what are the different catalysts in the market. You can link to another agent that looks at the mindshare on Twitter. We track 10,000 smart accounts. So if you think this is something you want to do, go ahead, press on deep dive. It will lead you to the AI-powered trade. Within the AI-powered trade, you can look at technical indicators right here, which signal the strength of the market movement. You can look at hyperliquid smart money, what whales are trading. You can look at the trade analysis that does not hallucinate. Now, if everything on this analysis looks good, you click one-click setup, agent sets up for you, and the entire trade just completes. So what we're doing is we power different hierarchies of AI intelligence integration. We allow you to deploy any part of your infrastructure for your research and analysis in finance anywhere you want, especially on the channels where your social already lives. Now, we want to unleash your superhuman trading capabilities. Please follow us. Find Alpha right here. Thank you.